What's happening, everybody? It's Sunday, 8 a.m., September 6th. My name is Amal. I'm going to do a morning Bitcoin and altcoin analysis for y'all because a lot has happened over the past few days. And going into the weekend, as well as the coming week ahead, there's a lot to talk about, right? Remember that Sunday, today, and tomorrow, the CME markets are going to be closed. The stock market is going to be closed because there's a US holiday. So that means most of the market participants are not coming back till Tuesday. So I personally think that everything that happens between now and Tuesday is going to be all chop. There's not going to be a direction decided, in my opinion, until the real market participants come back. The one thing that we know about Bitcoin, folks, is that it has heavily relied upon how the traditional assets such as the S&P 500 have been moving. We also know that Bitcoin has been highly correlated to the sensitivity and movements of the DXY, which is the dollar basket, okay? And the one thing that we can say about the DXY, the traditional markets, is as of late, the DXY has been obviously moving up. Not only that, it has been creating this whole base, technically a bullish pattern, which is a descending broadening wedge. The way descending broadening wedges work is they go something like this, all right? Price starts coming in and it starts bouncing around this area, gets broader and broader, and then eventually pulls back and then it starts breaking out, okay? So if that's the case, remember, in the DXY, compared to the traditional markets, the correlation is that they have an inverse correlation, meaning as the DXY goes up, traditional markets actually start going down. So you can actually see this happening, pretty much real time. As the last several days, we saw the DXY started to go up and the traditional markets, the S&P 500, if you look at things like Apple, Microsoft, these are all high beta assets, meaning relatively higher risk assets because they've been very aggressively, moving in the market because they're tech stocks, high growth stocks. And so because these markets have been moving aggressively, Bitcoin has been moving aggressively, down with them, right? We slumped down almost perfectly and rolled over as we saw the DXY starting to, break down, or not break down, but rather break up. And you could see the same thing happen with gold, okay? You can actually see gold had already put in a top right here around August, first week of August. And then after that, put in a lower high. And then again, after that, put in another lower high. So now what it's doing is it's printing somewhat of a descending triangle. And remember, these are, especially at the top, these are actually bearish patterns like this, okay? These are descending triangles and these tend to break down, okay? Not always, it's not necessary that they have to break down. It's just that they have a higher tendency to break down. So if that's the case, right, we see the DXY pushing up, we see gold already, putting in lower highs, we see the S&P 500 selling off, okay? The only thing that can save Bitcoin from heading down further is the DXY starting to roll back over to the downside, okay? And we need to see the S&P 500 start to push back up over the next week. So whenever the market opens Tuesday, we need to start seeing the market is actually being bought up, okay? This hammer alone is not enough to indicate that, okay, well, that was a good hammer, and from here, we have to push up. That is not necessary. We need to see follow through. And I think if we see that follow through to the upside, then I don't see any reason for BTC to not go to the upside. So it all depends on what traditional markets are going to do. Now, this sell-off, the bad thing about this sell-off, guys, is that we actually broke structure, which is, remember this price structure right here, this range, we broke it, okay? This was not a good sign. My sort of, last line in the sand for this range was this key low right here, which is around 10,500. We broke that. Not only did we break that, but we tested it as resistance real quick, and then we rolled back over again. So what Bitcoin is already trying to show you is, hey, I'm already below the range. Okay, so the critical support that was supposed to hold me up, that's already broken. The only thing that's holding us up right now is the 10K, psychological support, if you will. Other than that, let's just say if the traditional markets start rolling over the following couple days, well, then Bitcoin's probably headed down at least to 9,000, possibly even lower. Personally, I think, it's possible that Bitcoin gets up to this 50 moving average. Okay, now I'm going to show you guys exactly how this works. So I've explained the strategy in my previous video, and I'm going to explain it to you again in this video. So I have two moving averages. First, the 128 moving average right here, and the 50 moving average right here, as you can see. In the last 3 times in this whole 3-year range that we've been in, every time Bitcoin has made big parabolic moves like this, I'm sorry, I guess this is not 3 years. This is only the last year and a half. In the last parabolic move we made in 2019, notice that we over here started chopping around, and then we started moving sideways, and then we broke and headed towards the 128 moving average, which is the purple line right here, right? So we found support at the 128 moving average, and then we came back to test the 50 as resistance right there, right? We tested it as resistance, couldn't really stay over it, as you can see. And then we started to roll back over, tested as resistance right there, and then boom, broke down. We broke down almost $3,000 or so, at least. And then obviously we had this short squeeze, but again, point is, we came back to hit this 50 moving average, and then we started to roll over. Same thing right here. This was last year. Oh no, I'm sorry. This is this year. I feel like the year has been so long, so much has happened. So this is this year, right? Earlier on in the year when we had the whole coronavirus spillage. Again, price moves sideways, right? Rolls over, hits the 128 moving average, comes back up to the 50 moving average right there, barely can even touch it, and then rolls over significantly. I mean, drops at least, $5,000–6,000. Now, the point is that we don't necessarily know, first of all, if we're going to come up to this moving average, and we're definitely, going to hit it and then roll over. We don't know that, okay? It's very possible that if the traditional markets start moving well, then who the hell, gives a crap about the 50 moving average? Bitcoin is just going to blast up right through it, which, in my opinion, would be the very good case that if we blast up through 50 moving average, if we blast up through, say, 11,500, 11,600, I think we're very well headed to new highs meaning above this previous high. So we're probably headed to 13,000 or 14,000. Okay, that I'm pretty confident about if that happens. But we still have the same scenario to deal with, which is this 50 moving average is going to go something like this over the next several days. So if we come up to the moving average and we start rolling over, well, in my opinion, folks, I think that's my exit sign, especially if I start seeing the traditional markets give me that signal that, okay, it looks like the DXY is starting to tick higher. It looks like the S&P 500 is not able to hold its own and it's going to start rolling over. That's my exit sign. I'm going to probably exit every single one of my trades, okay? All my spot positions I'm going to get out of, I'll just chalk it up as okay, well, this, cycle of the market is done and I need to take my profit and get out while I can before the market starts rolling over. And in this particular instance, I think I'll probably start hedging and I'll start shorting the market, okay? Because if we start rolling over in the S&P 500, if we start ticking up in the DXY, and if we start, not able to get over that 11,000 marker, which is where the 50 moving average is, well, technically it's around like 11,150 or so. So if we can't get over those key levels, I have no reason to be in the market, right? Meaning on the long side, that is. So that's kind of my way of how I'm going to be playing the market over the next, couple of weeks probably. Okay, the rest of September, that's really my game plan. It's very simple. You just have to watch this movement right here. If you're looking at horizontals, right? Here's where the August monthly open is. This is a key SR level, okay? It's 11,350, right? if we cannot break over 11,350, at least preferably over, 11.6, well, I think it's very possible that we could, break down and start rolling over and breaking down further. And now if we're talking about support levels to the downside, well, listen, if we're going down, right, and we're rolling over, we're coming back inside its previous range. That's never a good sign, okay? Then what you will have maybe effectively created is this could be seen as a really odd looking left shoulder. This could be seen as a weird looking head. And who knows, we might have a right shoulder in here at some point and then possibly break down. Or it's possible that, we made a move up. This was, our distribution sign. We're now bear flagging right here. And then once we start breaking down, at the very least, we're going to hit this area down here. This is the area of liquidity, which is around 8,800 or so. Okay, 8,800, 8,600, all of that area. But again, I think it all comes down to how we're going to react over the coming days. I'm not going to sound the alarm and just say, all right, guys, it's time to sell. Because personally, we're sitting on top of the range, right? Like we're sitting right on the teetering edge of this previous resistance. So I would have much preferred, of course, if we were just, right around, say, this range low right here, and we were kind of hovering around this area, doing something like this up here, but we're not in those circumstances, right? We're actually lower than that. And that kind of worries me at least a little bit, right? Right now, I think I would probably say on a scale of 0 to 100, I'm worried less than 10% right now. Well, let's just say less than 15%. Okay. The other 85%, I'm still confident that we could possibly make our way back up. But if we make our way back up, again, our fate will be decided right at this 50 moving average. And I think the rest of the market is already showing you that it has sold off aggressively, trying to price in that risk. I mean, you could see Ethereum is down almost, I think, 20-ish% from the high. Oh no, I'm sorry. It was almost at a low of 36%. Currently, it's down 29%, right? Link, same thing. Okay, the reason these markets sell off aggressively like this, guys, is they're trying to indicate to you that there are inherent risks in the market that are coming up, and the market is trying to price it in well before these risks start catching on to the average person in crypto. So we're down 40% from the high in Link. We were down almost 53%, over the last several weeks in Link. Okay, even my favorite token DOT, which again, I still have, a lot of my spot positions still in this particular asset, but even DOT, I mean, this is an asset that I was really hoping that would hold up well, but even DOT from high to low, it was down 48%. Now it's down 32%. Guys, these are not good signs, The other positive way to sort of look at this is you can say, okay, well, maybe the market, just had a massive shakeout right here. And, that's it. We're probably starting to head back up from here because from the high to low, Bitcoin is down, 20-ish%. For DOT, we were down almost 50%. Now we're back, 35, 38% or whatever. Well, maybe that was it. Maybe that was a shakeout. And now we're just going to go on the most epic bull run. I think that's also a possibility. And that's why I still say that I'm still 85% confident that we could push up at least to 11,100. Okay, that's the only place my confidence reaches. Is I'm fairly confident we could get up that high, but I'm not confident that we could get up higher than that. But I'm also not confident to say that we're going to definitely break down from here, So I think this little range that we're in, this little white pocket that you see, that's really our, saving grace of what's going to happen for the coming weeks, possibly even the coming months. Now, we have the U.S. elections that are coming up, and to be honest, I think the Fed still has the same kind of, lenient policy that we've really contained since, late March, which is a very laissez-faire, heavy stimulative policy of providing, liquidity to the market. And so I don't see why that should change right now. unless there's some, very drastic signs, maybe another black swan event like we have with coronavirus. And again, that's possible. It's just not likely, at least the way I see it. The other way I can look at the market is, Faisal and I were discussing this. Again, Faisal is our equities analyst. He writes these equities updates every single day, and he has fantastic insight in the market. So he and I were talking about how most of these assets like Apple and Microsoft and Tesla, I mean, I'm sure you guys have heard about this. You're well aware that these assets are up well beyond any, reasonable valuation. Okay. So it just goes to show that the real bubble, especially whether it's specifically what was happening in crypto, which was DeFi, and then of course the high growth tech stocks like Tesla and Apple and Amazon, even cloud stocks or software stocks. These were all up tremendously, and so it makes sense that maybe this in itself was the bubble, and maybe we're popping now. Personally, when I think of bubbles, okay, you need a blow off top phase for a bubble, right? And I just don't think we've had that yet. I mean, don't get me wrong, that the euphoria was really high, whether it was in crypto, because remember, you had things like, YFI, okay, this thing, I mean, I get that, okay, yes, it's a very unique concept of a coin, but it's gone up from like, I think it was a few dollars to 30,000. There were random DeFi coins which didn't really have any reasonable project or game plan, going up 100 or 1,000% in a week. That is in definition, what a bubble does. I just actually haven't seen that final blow off top phase of a bubble, but who knows? Maybe, the market is kind of front running that. And they're saying, all right, well, we're not going to get to that blow off top because everyone is way too bullish already. And we're just going to pop this thing across the board. I don't know, right? This is why when you look at markets, you have to look at all things, okay? Could we go higher? And if so, what level do we need to break? Well, I just told you, maybe the 50 moving average, get over, maybe 11.4, 11.5, then we can start talking business of higher highs. If we get rejected here, well, I'm looking lower. I'm probably looking at least, low 9,000s, mid 8,000s. That's just, really the way I'm looking at the market. There's really no other way to look at it right now, right? We've sold off so aggressively. I'm thinking to myself, okay, if we sold off this aggressively, there's got to be some, remorse for a bounce back. And so if that bounce back happens, well, then I'm looking, for those key levels right here. And I think altcoins are also going to bounce back aggressively too. All right. So yeah, that's kind of where I am, guys. Let me see. If we look at price action, just simply from the standpoint of pivots, right? So let's do this, okay? So we're already below the monthly pivot, okay? We're already below the monthly pivot. We're already below the S1 pivot, which is, the first key support of the pivot. We're right near the S2. Just remember that my theory of how I look at pivots is when you break above the R2, chances are you're going all the way to the R5. If you break below the S2, chances are you're probably going all the way to the S5. Okay, so if we break the S2, meaning 9,600, I mean, I don't see any reason why we cannot head, all the way to the S5. Okay, especially if the stock market starts selling off. Again, all this is really dependent on how the US equities are going to open, how the DXY is going to open, coming this Tuesday. Okay, because Bitcoin is not an asset that moves on its own, guys. It's just not. Okay, it truly benefits from the money flows and the risk-on nature of how the big money, moves in and out of the market. And if the big money feels like, wait a second, the market is really too shaky, and maybe we need to start taking profit, well, then it's going to be profit taking across the board, whether it's crypto or gold or US equities, everything, right? And this again goes to show, if you look at this big drop in Tesla, right, or Apple, okay, or the S&P 500 over the last couple of days, right? These big drops that you're seeing, well, Bitcoin did the same thing, literally in the same time span. So what do you expect, right? These are all very highly correlated assets right now. And so everything, in my opinion, is dependent on how the US stock market feels next week. If they feel like, all right, guys, it's buy the dip opportunity, well, shit, it's buy the dip opportunity in crypto too. So we'll know sooner rather than later, okay? So right now, I mean, I'm still holding on to my positions. I have DOT, I have Link. Of course, I have Bitcoin because I'm trading with it. I have a bunch of other positions that I've told my Advantage members about. So I have nothing to worry about yet, okay? I haven't panicked and closed out any positions. The only position I actually closed out of was Rune. And this was pretty solid. We actually made a good 40-45% on this because our community got in somewhere around like early 5,000. So from here, we closed up on this big spike that happened. So about a good 60-65% or something. That's the profit that we got. So that was pretty solid. We took a good chunk of profit in this position, which we can now have just cash sitting on the side just in case, say, the market pulls back even more and then we see key support being held. It's possible that we can then buy a deeper dip. But the thing about this is, guys, 128 moving average, purple line that you see, if you look in any bull market, right, on the way up, like right here, we are well away from the 128 moving average. Once you start coming close to it and tapping as support and then getting rejected by the 50, well, then you started, your descent down, right? Even over here, right, if you look at the 2016, 2017 bull run, I mean, look, every time price came to tap the 128 moving average and then it pushed up, right? But again, this was on a big uptrend, okay? You can make the argument that, okay, well, what about here, Amol? Like, we tapped the 128 moving average and then we busted right through the 50 moving average, tested that as support right there, and then we took off. That's what I'm saying. If we get over the 50 moving average, and say we get over 11.4, 11.5, like I said, we're going to newer highs, way above 12,500, well above 13,000 in my opinion, okay? Because with such a massive shakeout, there's only two scenarios, guys, okay? The massive shakeout is a warning that the market is overextended and now it's time for a deeper correction, or it's an actual shakeout where you shake out people for a couple days and then you just go full turbo mode to the upside where no one has any opportunity to catch up and wait and see, for a pullback. There's no pullbacks coming. We're just going to go straight up like a rocket ship towards maybe 15,000, maybe even, the previous high of 20,000. Okay. It's very possible that, Bitcoin could just go full turbo mode and leave everyone in the dust. Okay. But again, keep an eye on this. Now, the final thing I'm going to show you from a bigger standpoint is the weekly time frame. Okay, so we're going to turn this off, and what we're going to do is we're going to turn on the 20 weekly moving average. The same thing. Okay, what I just showed you about the 128 moving average is literally the same thing if you multiply it out. All right. In the 2015 all the way to the 2017 bull run, look how the 20 moving average on the weekly has supported price all the way up, all the way up. Once you start breaking below the 20-week moving average right there, that's, game over for that particular cycle of the bull market. You start rolling over, and we rolled over for almost a year, right? Again, same thing. Once you broke above the 20-week moving average, boom, you took off. Again, over here, once you broke down, you broke down for a good $3,000. Again, you rejected it right there, broke down another $3,000 from this key high. Again, over here, we were above the 20-week moving average, came back down under it, and then we sold off almost $6,000 or $7,000. So guess where we are? We literally tapped the 20-week moving average. So you better pray to God that next week we just get a massive, massive candle or some sort of, redemption-like candle that shows us that, all right, guys, we topped the 20-week moving average. We're finding support right there. Well, we should start heading up from here, because then that will tell us that Well, we ain't just going to 13,000 from here, right? If we're tapping and supporting the 20-week moving average, more than likely we're probably going to 15K, probably 17K, maybe even getting above this $20,000 marker. Okay, so again, you better hope that we do not break through this 20-week moving average in any of the coming weeks in September. Okay, and for that to happen, like I said, all depends on the equity markets. Okay, I'm gonna have a more detailed equity breakdown coming up later today. We have an interview with a private equity analyst. He looks at the macro perspective on how the U.S. equities are doing, bond markets are doing. And so I'm really excited for this interview. He's a good college buddy of mine, and he works at a big fund. So make sure y'all check that out. Okay, it's going to be a great interview. But that's it, guys. You have my insight. You know exactly what I'm looking at. Personally, I think from the macro perspective, you know exactly what to look for. Okay, I hope this helps. Cheers, and I'll catch up with you guys tomorrow. Again, hit the thumbs up, join our Discord channel below.